Folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Sunday, November the 13th, 2011. Part of having a contrarian trading strategy is to identify stocks that are either A, extremely overloved, or B, extremely hated. And sometimes I refer to it as jujitsu training, using the momentum of another party. And when that momentum becomes too strong to sustain, that's when you step in and use their momentum against them, because you know they're either overly short, it's an overcrowded trade, and they're going to have to take some profits off the table. Same thing to the long side. Sometimes stocks that have so much momentum, they're just unable to sustain that momentum. It becomes a max pain situation where they have to take profits. Somebody has to take profits, and it sends the stock tumbling. So that's what we're looking to do here at the Contrarian Trader, is identify stocks that are at levels of unsustainable momentum. On November the 7th, I posted Diamond Foods Inc., DMND, as a contrarian trade to the long side, because the momentum to the downside was just so extreme and so difficult to maintain. Now, what happens is that during these periods of extremes, if you take a look at this chart here, I like to use the RSI quite a bit, because the RSI to me is more of a real-time, and at times a forward-looking indicator when you say a divergence. And when you see an RSI as extremely oversold as this one is here, you know that although it could stay oversold for a period of time, you're going to have your moments where the stress needs to be alleviated, and that's your opportunity to take advantage of a short covering rally. That doesn't mean the stock is not going to rally, pull back, and make new lows. More likely than not, that's the case, and we saw that last week. But let's just get to the charts on this. We traded it last week. On November the 7th, I added it as the trade of the day, contrarian trade of the day. On November the 9th, we added DMND. I sent out an alert to members, and we took advantage of this nice rally in the stock. So let's get down to the intraday charts. Before we do that, let's take a look at it on a longer-term basis, because I like DMND. I plan on getting back into it. We did take profits. I want to get back into it. Money flow is at extreme oversold levels. The MACD, this histogram here, it's beginning to level off. It means the selling pressure is beginning to subside. This is not a buy signal at all. MACD should not be used as a buy signal. If the MACD goes positive on you, more than likely you missed the best risk to reward entry point. So I don't use MACD as a forward-looking indicator. It's more of a confirmation indicator. Slow Stokes can be at extreme oversold levels for a long period of time. As you can see here, were you to have traded this, were you to have read Technical Analysis for Dummies, which tells you to buy stocks when the stochastics go below 30, it's the worst advice you could possibly take out of a book. And as you can see, every time the stock tried to rally above 20, it failed and broke down to new highs. Here, take a look at this. It was here where the Slow Stokes first went below 30. Could you imagine, having read this Technical Analysis for Dummies, they use this standard rule of buying stocks with a stochastic below 30, you'd go broke. You can't depend upon these books. You need to use price and volume action, candlestick action, so many metrics that I use, and I communicate to my members as to why we're looking to enter a stock. And you need to have all your tools. They need to come together and give you a reason to buy a stock. You cannot use an indicator as a standalone reason to buy a stock. Even on the RSI, last week, RSI was at 16. You should have bought it, no? Well, if you had done so and you held it overnight, it would be lower today. So I beg of you, I truly beg of you, if you're just learning how to trade stocks, if you're just learning how to use technical analysis and using charts, please subscribe to the 14-day free trial offer. See if I have something of value to give you. If you get something off of this video, then you'll probably do well by becoming a member, because I go into far greater detail for my members. So let's get back to Diamond Foods really quick. I'm going to go out, I'm going to pull out to an intraday chart, and I'm going to show you why we entered the DMND trade on the 9th. Okay, folks, what you're looking at here is a 15-minute chart, intraday chart of Diamond Foods. Now, you can see how it closed out. This is the 8th here, the final 15 minutes of trade here. You can see that it was weakening. Now the 9th was the day where we had the 2% correction in the markets. So here you had a stock. Here's the setup. You had a stock that was already at extreme oversold levels. Now we go into a morning on Wednesday, the 9th, which was just an ugly day. So they gapped Diamond Foods. I'll drill down further for you on this onto a 5-minute basis. They gapped it down, and that's when we said we need to, let's go to a 5-minute chart so we can take a closer look. And here you go. Here, this candlestick, you see these topping tails here on Tuesday afternoon. Now, when you see these topping tails here, it means more than likely the following day the stock is going to open up down, because there are sellers. That's what these topping tails are telling me here. There are sellers here. So we knew that the probability of DMND opening down on Wednesday morning was very good. Now you fast forward to Wednesday morning, and you saw that the futures were down and weakening by the moment. You knew that it was going to provide you an opportunity to get long of Diamond for an extreme counter trend rally. And sure enough, that's what they did. They gapped it lower. I watched it. It formed this bottoming tail here. And that is what's key. That is what's key. Watching for these bottoming tails. Sure enough, buyers came in. I sent out an alert to my members. Let's get long of Diamond Foods. Traded it higher. And let's pull back to a 15-minute chart again. You can see how it topped out at previous resistance. And you have to respect that. Remember, you can't lose sight of the fact that, granted, the stock is having a great day. It was up for most of the day, all the day, for the most part, except for that gap down in the morning. While the market was down, it showed relative strength. But you can't lose sight of the fact that, let's face it, Diamond Foods is a broken stock, and the probability of this counter-trend rally lasting is low. So when I saw it peak out here, I watched it. I just didn't take profits. I wanted to see whether or not it would consolidate and perhaps break out higher. It didn't do it. So later in the day, I sent out an alert to my members. You know what? More than likely, if it's stalling here, it's going to give way. And it's not a good stock to hold overnight. We have good profits. Let's take those profits and move to the sidelines. Watch and wait. And that's what we did. We took profits in the stock. It was a day trade. I'm not a big fan of day trading. However, in periods of high volatility, let's go to the volatility chart. Okay, this is a chart of the VIX. It's a measure of volatility. It's a measure of the cost of put options to protect against a downside move in the market. And as you can see here, we've been at elevated VIX levels for several months now. So when you have the VIX, the volatility index, which is just a measure of fear, at these levels, if you have a profit, it's best to take it off the table, because you don't know what the next day is going to bring. We've had multiple, I believe it's 68 days so far this year that we've had double-digit moves in the market, and that's a lot of volatility. That's a lot of volatility. So the one thing that hurts confidence the most is if you have a trade and you get greedy and you don't appreciate the volatility in the market, and you figure that the stock market is going to continue higher and you're going to let those profits run. You need to start booking profits in periods of high volatility, because the probability of coming in the next day and the stock market being down is very, very good. Or if the previous day was goes down, the probability of the next day being up is very good. So you need to take your profits, is basically what I'm saying. In periods of low volatility, then you're in a better position to set up your intermediate and longer term trades. So please, if you want trade alerts on what I'm getting in and getting out of a stock, join the Contrarian Trade. I'm sure it's worth your $2 a day that you'd be paying for it. Now, remember, just these two trades alone, Apple, which I posted a video on yesterday, and DMND, they would have more than compensated you for your investment. Now, Diamond remains in an extreme oversold condition. I am going to look. It's not an investment yet. If you take a look at the weekly charts, we broke below the 200-week moving average. And what I'm going to be communicating to my members this afternoon is when will Diamond Foods become an investment, meaning a stock to hold for 1 or 2 years? When will it become a swing trade or an intermediate term trade? I'll be going into that with members this afternoon when I send out my contrarian commentary the week ahead. And in that commentary, I discuss where do I believe the stock market's going to go in the coming week. We analyze the charts. We analyze stocks that we're looking to add to our portfolio or stocks that we're looking to short. So please take advantage of the 14-day free trial offer. I hope to hear from you. If you have any questions, please, I don't want anybody getting hurt in this market. The reason why I started the Contrarian Trader was to try to help level the playing field. After 2000, I've been around since 2005. That's a long time on the internet. After 2000, after what I saw these thugs do on Wall Street, all these people that came out to CNBC, these are the guys that you saw every day. The Henry Blodgett was the analyst that was pumping all the internet stocks. This is the guy who was on CNBC every single day. Yet he's one of the guys that should have went straight to jail. And he's banned from the securities industry right now. So all these guys that were in a position of authority, they had credibility in the marketplace, they sold this all out. So it was time to level the playing field. And I teach you what Wall Street doesn't want you to know. So please, if you have any questions, shoot me an email, robert@thecontrariantrader.com. Look forward to hearing from you and enjoy the rest of your Sunday. Bye-bye, folks.